In Stocking Up today, Joe Cusick of the Cusick Group joins me now, and he likes to bring us a bull and bear report today. He says he is bullish on not one, but two stocks. So good to have you here on the show.
Thank you, Angie.
Let's start with Cypress. This is a semiconductor company. Company makes chips. Chips are in everything these days, from GoPro to Apple phones. Lots going on.
Yep. IBM, Cisco, you have it all right there. And so when you see a name like this and the activity that starts to pique your interest, you want to point it out to everyone. I actually saw 16,000 of the July $11 calls trade at right around 25 cents. They're out of the money.
Where's the stock trading?
Stock's trading yesterday right around a little more than 10 and some change, around 10.20. So it's an interesting play. The stock really bounced yesterday, obviously Brexit hangover. But this is interesting. They have earnings towards the end of July. It looks like someone is positioning. There is open interest there, and so we're going to watch that open interest number. If it increases, we can see some bullish activity going into earnings and going into this post-Brexit, thank God.
So traders think that this stock could go from $10 to maybe above $11.
That's what they're anticipating. And again, with these types of plays, if it's a speculative play, even if they get a big upside move, short big burst, like let's say to 1050 or 1075, and it doesn't hit 11, these are still going to appreciate, right? So it's a limited risk type of opportunity. It is completely speculative. It has about 30 plus days until it expires. So there is capital risk, but if you sized it correctly, then you're going to see something. And again, you're going to watch how this earnings cycle starts to play out. Once we get Brexit behind us, we're walking into July. This is a big part of the earnings cycle. Let's get on that right now.
Time to look forward. Let's look forward as well at Ford. Now, you say there's reason to pay attention to this stock, and you are bullish on Ford. What do you see happening here?
You know what? I saw Ford trade something very interesting, because as we've talked before with the audience, when you see longer term options trade that have more than, let's say, 3 months, 4 months until expiration.
How long are we talking here?
We're talking until March of next year.
So traders are putting on positions for March of next year.
Correct.
That's a long way to go.
Yeah, and stock was trading at 1338 yesterday, right around that level. Around 7,600 of the March 15 calls, they started trading at 41 cents, right? So these are out of the money, but they're trading for 41 cents. They traded up to 45 cents, right around there. But the majority that I saw were at 41. There is a probability of expiring above that going into March right now of only about 25%. So looking at this, I see two things that are occurring. One is you have a bullish stance. They don't have the conviction to say they're going to buy the stock outright, but they're going to buy options. Two is that they're taking advantage. If rates do start to move unexpectedly into the end of this year or into the beginning of next year, that's going to help these calls, because interest rates, when they increase, that helps longer term calls rise in price even without any movement in the underlying.
Well, and I think with Ford, you have to look at the other factors going into this. Will Ford sell more 150s?
Right.
Will these trucks have been so hot in the past?
Exactly, and that's the sales season. When you get into that spring sales season, which is getting into the teeth of it in March, that's where you're going to want to watch it. And especially if we start to see globally that there's a turnaround going into the first quarter of next year, that could really help Ford, because we've seen the sales both in Asia and Europe really help Ford.
Thank you for your bullish plays today.
You're welcome.